Hello, everybody. You can hear me.
Yes.
Moro. No. It's nice to be here and back to VTT after 15 years. I can tell you that nothing has changed, at least in this building. I heard there's some homevaurioita, but let's see what the future brings. Yeah, today blockchain, and to give compliments to Mr. Ohtamaa that this is I heard this is the first seminar in VTT for last 2 years. So it has been COVID offline, and this is first ever post-COVID seminar in this room. Yeah. So today is about blockchains. I learned today that they do some very cool blockchain research here in VTT in Oulu. So I was super stoked. I didn't know that anybody in Finland does it. And also this is probably the longest blockchain seminar in Finland because there hasn't been any. And if there would be, I would know about it likely. Because the community here is so small, and I think to have the most of the people of North Finland community in this room at the moment. And yeah, some of my background, as Dharma told, nowadays I'm a CEO of a company called tradingstrategy.ai. I'm living abroad, so I'm living in Gibraltar. That's a funny country at the south tip of the Spain. It's a former UK colony. It's the second country after Japan in the world where they had the blockchain or cryptocurrency regulation back in 2017. And yeah, having been dealing with blockchain for the last 10 years, which is pretty much max you can do outside handful of people who were the first Bitcoin developers. All right, I need to take the slides from here myself. And yeah, that's pretty much my background. And I think what we can do is that we have around 60 slides. It's going to be like a real lecture, like in a university. And after that, we have plenty of extra time. So I'm happy to answer the questions. And I think people here probably want to discuss because a lot of blockchain people haven't seen themselves in any event for the last 2 years. And yeah, for the agenda, first some background, how we created blockchains, then how some hard tech about the current blockchains, how fast they are, what blockchains there are out there, and then about decentralized applications, what kind of applications you can have, what kind of a discussion about blockchain and its promises, what has been promised for the last 10 years, is it what is promised or is it a scam? And then some other discussion how blockchain probably going to change some things in the political system and regulation and whatever is coming in the future, near future. And all starts with the creation of internet, because without internet we couldn't have internet money, and all of the steps like that precedent blockchains, like creating of the Linux open source, creating of the private and public key cryptography, and so on, has been the shoulders of the giant that the blockchains have been built on. And blockchains themselves, they start around late 90s. So if we look how the landscape looked in tech around 90s or early 2000, we had created a lot of cool tech. If somebody was studying, let's say early 2000, they still remember IRC network, where people went to a chat or date or whatever. And then we had the Usenet discussion groups. We had the open chat protocols. You actually could chat with anybody using your app, ICQ or AIM Messenger or Microsoft Messenger, and they were all compatible and they were all using the same XMPP network. We also used to have these things called blogs, and people went to the blogs, they write posts and other people commented. But what unfortunately happened, that all of these cool things that were open and nice and were delivering the, how it was called, the highway of information, they all died, and they died for the same problem, and it was spam abuse. There was no limit what you could do on those networks, and they get spammed until there's none of this good stuff left. And even email today, you can't really run your own email server because you are not going to be whitelisted on outlook.com or gmail.com, and which means you need to buy email as a service. And all of this freedom of early internet is gone today. And cryptocurrencies themselves, they actually started as a way to limit email spam. So basically, the first idea was that if you send an email message, the sender needs to calculate some amount of work to make sure that this message is not spam. So they basically need to waste CPU time to calculate the hash, and the receiver checks this hash, and if the hash is right, the email receiver sends that some amount of energy was burned to send this email. And if you are sending spam, you are usually sending billions of emails. And for a cost of sending that much of useless emails, the cost of energy would be too high, and that way we could limit spam. Unfortunately, this never did happen, but the same proof of work concept was recycled to the Bitcoin. And when we looked at blockchain as a technology, so this is the core value promise. So what does it actually solve? First is the abuse. So when you are doing a transaction in an open network, there is a cost, and because there's a cost, there can't be an infinite amount of abuse like spam. Other one is trust. It's a distributed ledger. So using a private and public keys, you can always confirm that if somebody is doing a transaction, computers can confirm that it's the right person, and you can't modify somebody else's data, which you can do if you have ever used Excel or Google spreadsheet or any of these corporate systems. You can just go to your coworker file and make a mess of it. Other one is privacy, like using private and public keys. You can detach your real world identity of these transactions, and you don't need to say that Mikko goes to the shop and buys beer, but you can see that address goes to the shop and buys beer. So it's kind of a privacy preserving layer, and it's now very important with GDPR, and we have seen what Facebook is doing with the data. So having a privacy is a good thing. And the other one that's a property of the blockchain is that it's resilient. So if you have a sufficient amount of servers all around the world, like original internet that was created to survive a nuclear war, blockchain is the same. So you can take out countries or even continents, and it's still happily running. Unlike AWS servers, if you have been hosting websites, you know that they tend to go down. And as I mentioned, proof of work, it's an early concept, and it evolved to Hashcash as a spam prevention. And Bitcoin itself started by this famous Satoshi Nakamoto, the mysterious person, in 2008, which is already like 15 years ago. And it basically just took the concept of peer-to-peer network and the proof of work and combined them to, hey, if I have this concept for making sure that the messages are having some other cost, so can I use it for money? And that is how Bitcoin was born. And 4 years later, already like people realize that okay, Bitcoin is consuming too much energy. So is there other ways to secure the network instead of just burning oil? The proof of stake was born. The pair coin was the first proof of stake chain, and then it evolved to delegate proof of stake, which is basically the model that all the blockchains today are using. And it was first piloted by BitShares in 2014. And early blockchains, they were only able to transfer one coin that's specific to that blockchain. So Bitcoin blockchain and Bitcoin, the currency, were like intact together. You couldn't do anything else on Bitcoin network than sending Bitcoins. And that's how it's still today. But quite quickly, people realized that, hey, if I want to build some kind of other applications on a blockchain, it's very bad if I need to run the whole blockchain stuff myself and basically create a blockchain from scratch if I just want to change one parameter. So that led to the concept of the smart contracts, that you can use the same blockchain to run different applications without changing the blockchain itself, which gives a massive amount of flexibility and stuff you can build on the blockchain. And first of those blockchains was Ethereum, and it was launched 2014. Probably didn't start running until late 2015. And then everything else has been like iterations of this concept of smart contract blockchain. There has been some optimizations here and there, but the foundation was set out. And nowadays, okay, it has been a long time. So Ethereum itself is like still used. We have something called Ethereum mainnet, started 8 years ago, still running, basically unmodified. And it's because it's so old, it's very old tech. So it's super slow, super inefficient. We have created the new blockchains that basically do the same, but they are faster, more scalable, using a better consensus algorithms and basically optimizations in the software itself that runs the blockchain. And we are basically getting to the levels that they can be super, super fast. Solana can scale up to 8,000 transactions per second, very cheap. You are paying on something like $0.0001 per transaction, so it's basically almost free. For the comparison, I think all the Visa transactions in the globally are 50,000 transactions per second at peak, and that's not single network, so it's all the different countries combined that are independent networks. So the scale is there. And now what's going to be the next step is that we start to have a different networks that work together. So you can have blockchains that are for specialized purposes, like games. You have a network that's only running on Avalanche. It's called Rapadara, trap game, let's call it that way. That's running only the game transactions that are cheap. They don't need to be that secure because it's low value transactions, and only now and then you are syncing the state to the mainnet that's more expensive. But that way you can isolate cheaper transactions or less important transactions to their own chain, and then you are using the main chain only transfer important things or more value at the time. And that's pretty much about the history. And now we are talking about what's the latest hot stuff going on. So here is 2022, if this ever recorded on YouTube and somebody's watching the presentation. And basically, I would say this year, there has been discussion for the last 10 years that the Bitcoin is wasting energy. It's so much polluting. It's so bad. Bitcoin is still there, and it's probably going to stick around for a couple of more years, but it's dying. So other more efficient blockchains are taking over, and we can, for example, in cars, you can see that when Henry Ford created the Ford model, he thought that it's going to be the final car and there's not going to be any other cars after that, and he was like serious about this documentary. But it wasn't the case, and there's always improvements, but it also sometimes those improvements they take a long time in adoption, and this better blockchain technologies are taking over, and Bitcoin is probably going to fade out, but the fade out is going to take not years but decades, and it's kind of a problem that's solving itself. So all this concern about the carbon footprint of Bitcoin, it's already peaked, and it's probably slowly going down, but it's going to take a time. So it's not going to be that bad problem in the future. And what else is going on today is that we have different blockchains. We have people who are trying to achieve scale, and we have people who are trying to achieve privacy. So Solana is a blockchain that's trying to scale what's called vertical scaling, and it means that you are having faster and faster computers. So you have a single computer that's running the blockchain. The whole blockchain fits to that specific computer. You have a couple of, I think they have 9,000 nodes around the world. And the only way to scale that network is that you are adding faster and faster computers, and that's their scaling model. And I think running the Solana node today, it takes like 128 gigabytes of memory. You need to have a really fast CPU and so on, and you are still getting a super fast throughput. And if anybody is a software developer, Solana is built on a technology called eBPF. That's the same as used in a Linux firewall. So they are basically using the same virtual machine that's running inside Linux kernel and taking care of the firewall there. Then we have other approach that's scaling horizontally. So you have subnets, or you have shards like in a database, and you are adding a lot of those shards around, and the shards have some way of communicating with each other that's secure. And near blockchain is one of these scaling approaches. It can go further, so near can scale forever. The only problem with this kind of scaling that when you're adding shards, you have a problem of syncing data between the different shards, and you are adding light speed problems and stuff like that. So writing smart contracts for near blockchain is much more complicated than it's for Solana or Ethereum, and it's holding back the adoption because you need to reconfigure not only the software, you need to create new software tooling, but you also need to reconfigure the software developers to educate and have a different mindset for them, like how this is supposed to work, and what can go wrong, and what are the gotchas and pitfalls to make sure that you can write the smart contract that works in a sharded blockchain. Then we have some blockchains that are optimizing for privacy. I think the most famous one is a secret network, and they are different from the other blockchains in the sense that you don't see what's happening there, because normal blockchains, all the transactions are public. You are seeing the transactions and sender and receiver, and anybody can verify it. But on a secret network, it's like turning off the light, and only participants know about the transaction are the sender and receiver themselves. And it's important for some applications, like for example, stock market, like professional big stock markets, they don't want to disclose their transactions, which is opposite of DeFi model. But the old traders, old investment banks are kind of institutions that are not fan of the idea that all of their transactions are public. Then we have these blockchains that are called layer 2 blockchains. They are based on these layer 1 blockchains, as I explained earlier. they are syncing some of their state back to the main blockchain, and they are then running some kind of internal state that's cheaper but less secure. And there are two ways to do it. One is called a optimistic approach, that you are running your layer 2 blockchain, and only in the case somebody sees that there's something fishy going on, they can challenge the transaction on a layer 1. So they see that, okay, in layer 2, I think this is not valid transaction, and unless the person who made the transaction or a state transition accept the challenge and can verify it on layer 1, like the more secure layer below, it's rolled back. And it's basically challenge-based approach, and it's sometimes called the fisherman, that you go to a fish and try to fish out the bad transactions. The other approach on layer 2 scaling is called the zero-knowledge rollups, and it's based on very advanced cryptography that's called zero-knowledge branch of it, and it's way above my pay grade. The math is super complicated, but the idea is that each block that's on layer 2, you will create a proof that's a kind of mathematical proof, and you will post it on layer 1. Creating the proof takes a lot of time. It's taking a lot of CPU because it's complicated polynomial calculation, but verifying it's super fast. So you are creating a proof for all the transactions, and the proof is compressed, so it takes less space, and then everybody can verify it layer 1 and see that, okay, the blockchain is doing it right. What's also going on is this year is called the cross-chain bridges, because unlike back in the day, we only had the Ethereum mainnet, and that was the only chain that everybody cared of. We have a different chains, and people quickly realized that you can't transfer tokens from Ethereum to Polygon or any other blockchain natively, because every blockchain is its own chain and they don't communicate with each other. And to communicate between blockchains, you need to create a bridge that's basically reading data from one blockchain and writing it back to other. And then the other blockchain is trusting this bridge, like whatever is passed over it, there has to be some kind of guarantees that the message is valid. And basically then you need to you have this thing called trilemma of blockchains. You can choose only 2 out of 3. You can choose decentralization, that it's widely spread and you have plenty of servers and independent parties. You can choose a security, that nothing bad happens, so that the message would be invalid. So somebody would pass in a message that say is basically lying, or you can choose a scalability, like how many messages or how long delays you are willing to accept. And one example on these bridges, that if you are moving tokens from from Ethereum to Polygon, it will take several hours to transact through, and to other direction it even can take a week. And basically you are sacrificing scalability just to get security, like you are willing to wait a week to make sure that your token actually makes through to other chain. And this is one of the active areas of development. Then what's old but new is called storage. So far we have been only transferring value, but people also like to store files, and they would like to store those files in a way that it's not depending on a single company. And you can pay upfront for your storage cost, and the file will just keep staying there. And a couple of projects there is Filecoin, Arweave. They have not really figured it out yet, so they are prototypes, and it's still kind of, after 10 years, it's still early, but there's progress being made, and they are getting real applications. And even for like some normal business-to-business applications, let's say a media house, you are editing a lot of video files, buying storage from this kind of decentralized storage might make sense. It could be cheaper than in Amazon. Well, especially Amazon, because Amazon is so expensive. But it starts to make some business cases there. And the other one is like IPFS. It's not the storage, but it's a cache, and it's like what you could think it as a BitTorrent for websites. That when you host a website on IPFS, it's duplicated when people are accessing it, and it's if it's popular website and everybody's using up IPFS, in theory the website itself should spread around the globe, and whoever is accessing it should get the content from the closest node of their computer. And we have some weird stuff going on. So we have a blockchain called IOTA that's mostly European based. It has a very strong community in Germany. It has a somewhat flaky reputation, but it's popular in Europe, so I put it there. Then we have a blockchain called Cardano that has been in academic development for the last 5 years, and it still is, so I don't ever know if it's coming out. And then we have a Ripple, which is one of the first blockchains, but nobody's figuring out Ripple Ether, and now it's in US court. It was challenged by SEC that they are doing securities fraud, and unlike any other company, Ripple was like, okay, if you think we are doing it, then just sue us. And the SEC sued them, and now they are figuring out if there's any legs there for the court case. And then we have what I call permission chains, Hyperledger. We have something called Oracle blockchain, and Coda from R3. And for these guys, I have discussed with industry experts from banks and so on. And although they have been around, they are still looking for the use case, because most of the blockchains are useful for public transactions, and the banks and parties like that want to do a private transactions, and in that case you just could use a database. And it was a huge promise 2018, and after that I think Hyperledger has let most of its peoples go, and probably going to slowly fade away. And now we have discussed about blockchains themselves. So we haven't actually discussed what you can do with blockchains that are meaningful for the humankind. And this part I call decentralized applications, and there are plenty of them. And if you look the business problem that blockchain solves is I think the core of the value promise is that it's the proof of ownership. This is the NFT model. Okay, if you claim that okay, Mikko has 1 Ethereum, anybody can, and Mikko says this is my address, and I can confirm that this is my address by signing a message with my private key saying that this is my address, and you can see that it's coming from that address. Anybody can go to a blockchain explorer and verify themselves that okay, Mikko actually has a 1 Ethereum, and this is quite important in international trade. Like it's not the consumer application, but if you are doing a large trades between banks and between companies, you really want to know that if your other party is actually having the asset or not before you engage with them. Other one is the peer-to-peer trades. Like if I want to sell my house to somebody in Finland, I can in theory I can go to on a street and start calling people, hey, do you want to buy my house? Do you want to buy my house? But usually there are some kind of middlemen involved, real estate agents and so on. And this comes very important in the case of the internet. So in internet, can you trade with other people without going through any of the centralized systems? And the centralized systems have their own problems. Like for example, Facebook, is that they get your data. They can squeeze you with the fees. Let's say that if you have ever hosted a conference and getting payments with the PayPal, you find out that you are getting 5% less money than you thought because PayPal is getting the cut. And blockchain solved this middleman problem because in blockchains, the blockchain itself is verifying the transactions, which in old-fashioned business is verified by some middleman. And this way we have one less person in the equation, and it means it's going to be cheaper. And then we have the value of transfer. So again, it's not a very interesting problem on national level. Everybody can send money to each other in Finland for free. Even in the United States, transferring money nowadays is cheap unless if you keep it within a closed loop system. But if you start to do international business, you will soon find out that there are a lot of fees. The fees don't make sense. Like you are paying one person to transfer money to United States, and the fees they slowly stack up. And I don't remember who he was, but he was some of the professor of the university saying that okay, why fintech is so popular is that fintech or banking is kind of a parasite. They are taking small bits of your blood, but the bits are so small that you don't care. You still keep living, but as long as you suck people slowly enough, you can suck a lot of money out from them. And of course, the good old Bitcoin value promise is the censorship resistance. Like if you have Bitcoin and you are going to send it to somebody, nobody's be able to stop you. So it's kind of again not very useful in Finland. Nobody's going to stop you here. But if you go to some of the funny countries, there are a lot of people who want to stop you doing stupid stuff. And based on those value promises, we are still dealing with the software business. So we can't really create a value out of nothing, even though like tens of thousands of tokens have tried it. It doesn't work like that. So there has to be something we do better than the old system. And as I mentioned earlier, removing trust from the equation is one way to do it, because based on some research, businesses spend 30% of their budget to maintain trust, like the sales guys, face-to-face meetings, just to show off that I'm reading. And the other one is, of course, the software development cost. So if banks pay X amount of their software, having their staff, having a big department of developers, managers, middle management, management bonuses, if you can replace that with one smart contract that does the same thing as a bank, but has 200 people less there taking salaries, you are of course creating value, because then those resources can be allocated to somewhere else. And if there's like a value promise, okay, but blockchain is going to solve something, it's usually the question is that, okay, there's something that's being removed. So who is that person? How much money they are taking now? How much money the blockchain system will take, and how much we are on plus after removing the middleman. Sometimes it doesn't make sense, but especially if you're doing a business in scale, you have millions or tens of thousands of participants, removing a middleman really starts adding up fast. And now we are getting to the good stuff. So blockchain has been around for 10 years now. People are asking like, why is it not doing anything yet? And the answer for that question is that we are building our building our way up from the bottom. So we had to first invent the transaction layer, like how we can send us transactions to each other. Like back in the early internet days, they invented email that, hey, you can actually send a message. Then on this transaction layer, we created smart contracts, like how you can do a little bit more complicated transactions, how you can actually add business logic to those transactions. You are not sending money. You are actually making a deal with somebody that based on these conditions, something can happen. And then we created token. So back in the day, as I said, there was only a Bitcoin, but now you can create tokens easily, and those tokens can present assets. And anybody basically in this room, it's so easy. You can go and create your own token. There are like web wizards for it. You can go and click from your MetaMask, and you have a token. And if that token has value for a reason or other, then you can start distributing those tokens to other people, and they can start trading. And this alone is kind of mind-blowing if you have ever dealt with stocks or a system like that you can so easily create an asset and people can actually trade it. And now we have a token. So what we can do with these tokens, we can actually trade them, like sending them around for free would not make sense in the long term. So you need to have a business. So decentralized exchange was born, and on a decentralized exchange, you can trade on a blockchain. As we mentioned earlier, it's peer-to-peer. So everything happens on chain, and nobody is needed there as a person. And now we have something that has value and can be traded. So now we have getting closer to this year. So we are creating governance layer. So we created DAOs. So okay, you have a trading and investing going on, and you need to somehow manage it. You need to actually have a systems to voting. You need to have a systems to make tallies. You need to have systems to make decisions as a community. You can always have everybody in the same room and raise their hands for a vote, but it doesn't work in a global scale, especially if you have tens of thousands of participants, and thus the DAOs and the solutions for DAOs were born. And now we have basically created the whole 500 years of the corporate management on chain, so to say. So we can finally have a real business applications here. And now popular is gaming. It's called GameFi. So putting game assets on chain. Video game players are digital natives, so they understand this stuff. It's much easier for them than for boomers. So having a fancy hats that you can trade makes sense for them, even if it doesn't make sense for me. Then you have a finance automation. So if we have real assets on a chain, we have something that has value. So how can you optimize value out of them? How do you create portfolios? How you create index funds? How you create something that is easier for people to invest and buy instead of just going to the market and trying to figure out from 15,000 tokens what are the important for them. And now as the latest one is called a creator economy. It's very early for creator economy on chain, but if everybody has been ever on the Facebook or Instagram or Twitter and seen any of the influencers, those influencers need to make money somehow. And usually the terms that the Instagram gives for influencer are quite unfair. They pay them 0% from all the content. So if you can give a more fair deal for any influencer that, hey, we have a new decentralized social media and you can actually keep most of the money you are bringing for the ecosystem, it's a very good deal for them. And let's look through these applications one by one. So first one is the Bitcoin itself. We create a censorship resistant money. And I know that a lot of people hate Bitcoin and say that it has no value. But my own theory is that if China and Russia want to ban it and hate it, there's definitely some value there. So there's lot of use cases in I would say like in humanitarian field. There's a lot of use cases for journalists and people like that can actually they can't use the financial rails of their country, but they can still use a Bitcoin, and it seems to be working. It's not working very well, but it's working. So Bitcoin has some use cases beyond buying drugs. Then we have tokens. So as I mentioned, tokens are the first decentralized application. Hey, just create a tokens and create a bunch of them and distribute them to people. Most usually blockchains have different tokens depending on which blockchain you are. Most famous one is called ERC20 standard. It's running on Ethereum. It's also getting quite old and it has problems, but it's most well known. And if you ever get a token, it's most likely to be a ERC20 today. And then we have a specialized tokens called stable coins. And back in the early days, I think it was only 2014, 2015, people realized that Bitcoin is not that good of transfer of value or medium exchange. It doesn't make sense to have store prices in Bitcoin because the value of Bitcoin is fluctuating so much. So making trades with Bitcoin for normal things doesn't make any sense or very little sense. And two stable coins were born. So if we can put something on a blockchain that is actually following the value of the real money that people are used to work with. And in the case of us, it's euros. In the case of the international community, it's the US dollar. And first, there are a couple of different stablecoin models. Easy to understand. It's so-called asset-backed, that they are somewhere on a bank account, $60 billion US. And then we have a Tether token that's a tokenized version of that value. And you are basically, as your token is presenting whatever value Tether has in their bank account. And most famous asset-backed stable coins are USDT, Tether, USDC, Circle, and Binance USD. Then we have a crypto hardcore version of the stable coins like DAI. In this case, you don't have any money in the bank, but you have cryptos in a smart contract. In this case, for example, Ether from Ethereum. And when you deposit or lock your Ether there, you get a certain amount of stablecoin back that's following the value of the US dollar. And of course, there's a ratio. So if you put in Ether, let's say that I'll put 500 USD worth of Ether into a smart contract, I get my 500 DAIs there. The problem is that if the value of collateral, if the value of Ether fluctuates, in the smart contract there's only a $100 worth of ETH, but I still have 500 DAI. And for that case, what happens is auction. So my Ether is sold to somebody else for real 500 USD. And that way the system will keep it in balance. So it's basically creating a kind of synthetic assets. And then we have algorithmic stable coins. I think the most infamous is Terra or Luna story that collapsed recently. There was like, I think at the peak, it had a 18 billion worth of USD value. But the problem was that it didn't have enough reserves, so that it didn't have enough backing. And what happened that when people started to realize that there's too much air, there was panic to redeem it. People were running out from Terra, and bank run and the debt spiral happened. And in the end, the system was left with I think 6 billion USD worth of bad debt. or basically a money that people can't redeem. The second most popular application is decentralized exchanges. So now you have assets, you can trade them. The thing is, where do you trade them? And instead of going to a Binance or Coinbase, you can already do this on a blockchain without counterparties. And the benefit of trading them on chain instead of going to a centralized exchange is that there's no what's called counterparty risk in trading. So if I'm going to buy, let's say in the old-fashioned world, I'm going to buy stock from stock markets. I'm going to buy Nokia shares because that's the best asset in the world. And I go to my little Nordnet account and click buy button. It's actually not until 3 days later I get my shares, because in all banking system settlement is not instant. It takes time. Somebody somewhere needs to send money to other person. They settle lump sums and so on. It's not a visible process to normal user, and it's not a problem. It's only a problem if somebody is getting bankrupt on way, and then the money is getting stuck. And I think most normal consumers have only probably faced this kind of problems if they bought tickets, if they want to travel, if they bought airplane tickets to somewhere else, and the airplane company bankrupt during the COVID. So that's probably the close analogy. It's not a problem for small users, but if you are actually making big trades, it starts to add up. You need to be sure that you can get the money out from the bank in time, even if the bank itself will be able to deliver you the money. But if it comes 10 days late, it's going to be a problem for your personal finance. I think if there's a TV news and there's a news that, okay, now Osuus Pankki had a problem in their system and people didn't get their salaries, it's going to be a huge mess. And none of this can happen if you are trading on chain using smart contract, because there's transactions settled right away. They settle in the same block, and you are always going to get money or your assets when you are buying or selling something. And this is kind of the killer application of the blockchain, so to say. So let's move on. And on a decentralized exchanges, we have a special category of exchanges called automated market makers, or AMMs, and it's based on like theoretical research on somewhere in the 70s. They didn't have an application for it because can't do it without blockchain. And it's an exchange where the price of an asset, it's not based on ask and bid, but it's always following some mathematical curve. So if there are buys, the price will go up in a certain function, and if there are sellers, it's going to reverse, and it's always following the same shape, so to say. And Ethereum was the first blockchain where we had a bonding curve exchange called Uniswap, and despite all the skepticism, it actually proved to be a quite good model. And it's especially if you have an asset that has little liquidity, or there's not many trades going on, it's slow moving and so on. This kind of a model that's a bonding curve instead of let's say auction works surprising well. And this is something that we are finally getting to the states that the old financial system can't really provide, and blockchain is really pushing the boundaries of the innovation here. And the other one is class of exchanges are called order book based exchanges, or your normal stock exchange model where you have asks and bids in the book and they are stacked, and based on that order book, orders are being filled or cancelled. And the main difference between the AMMs and the order books is that because in an order book you need to track every single order, it's going to take a lot of more resources and database resources like memory and storage, or state as it's called in blockchain. It's heavier, and only the latest exchanges like Solana and Near can have order book based exchanges, because they are not really possible on Ethereum or its clones, because the underlying transaction layer is just too slow. And this is like something we start to finally see in on-chain world actually this year. So Tonic was launched like 2 months ago, and it's like cutting edge at the moment. Other side of the coin of trading is not only a buy and sell, but you can also lend your assets. And since early 2020, lending pools have become very popular. So you have your USDC stablecoin, and okay, you can hold your money in your wallet, but you can also act as a banker and lend it out to somebody. And okay, you can go to some bank and put money on your bank account, and the bank will lend it out, let's say to a mortgage. Somebody wants to have a mortgage and takes their cut there. But instead of having a bank in the middle, how about you are matching your lended out stable coins straight to the borrower, and there's no bank in the middle, so you're getting rid of the bank. And because there's no bank, there are less fees, and that's the idea behind lending pool based smart contract services. Two of the most famous ones are Aave and Compound. And yeah, Aave has Finnish founders, as you might guess from the name, but it's not really a Finnish-based project anymore, or ever was. And I think Aave is one of the largest DeFi projects in the world. I checked this morning, and they had 9 billion USD assets under management, and they have been running solidly for the last 3-4 years. So it's really a high quality project. Then we are getting to the funny stuff, or NFTs. NFTs were launched 2017. The first project was called CryptoKitties. So it was kind of not even a game. You could have cats, so different pictures, and you could mate with other cats, and they made more cats, and you get more funny cats out of that way. It really didn't catch on. 2018 crypto winter happened, and most of the projects died. But also there was the problem with the supply, because of to have value for the assets, it needs to have scarcity, and you could breed these cats as much as you want. So there was an infinite amount of cats, and that's why the value of the cats had to go down over the time, and it really didn't work in long term. And 2019, 2020, other kind of NFT projects were born. I don't know who he was, but he came idea with this art NFT, and it still took like a couple of years to catch on. I don't know what kind of marketing stunts they pulled there to make CryptoPunks a thing. So owning this pixelized image is a kind of became a status symbol in the crypto communities, and then it spread out to a real world. And then people realized, and it's cool. Nobody understood them and probably still don't, but it's still cool. There are probably a lot of down in the value. It was at high value, but it's here to stay. So NFTs, if they didn't do anything else, they at least brought the blockchain to the masses, and everybody and their little sister were drawing NFTs and hoping to get rich with them. It's not that easy. And again, here what the blockchain brings as unique aspects for this. So you have had collectible cards forever, like Magic the Gathering or Pokemon cards or ice hockey player cards in Finland. And of course, you can trade them and you can go to a centralized exchanges to trade them. But in NFTs, they decouple that you can have the NFT in your wallet as a digital property, and you can go to any marketplace and sell them, or just sell them directly to a person. So basically, there's no closed loop system you could see in the video games. And if it's closed loop system, then somebody can control what's being traded, and basically usually blockchain trades, they see that it's bringing down their own value. And the most famous NFT marketplaces are, I think, OpenSea, and that's a big company in the United States, very old-fashioned company. And the other one is LooksRare. That's more of the crypto company. It's a DAO, and everything is decentralized and so on. Then something that has some relevance already to the real world is domain names. So basically, there's a domain name register called ENS, Ethereum name system, and it's similar as DNS, that's domain name system in the old world. And it has been making for 5 years, and it's slowly getting adoption. The problem is that web browsers don't support it natively, and probably won't support it anytime soon. So it can't have mainstream adoption until this happens. But people are working on it, so maybe we will see it on one day. Then we have GameFi, which is quite relevant for Finland, because 0.5% of Finnish GDP comes from mobile games. And there are two important aspects where this can play part. First one is funding. So NFTs and tokens and all of that stuff, it makes the company more investable or easier to invest if there's something behind it. And the other one is alternative revenue streams, or basically going around Apple and Google tax. Because for a software business, if somebody is taking 30% of your revenue for nothing, it's kind of a heavy tax on you. And if you can make money by going around or Apple and Google, it's of course it's your company is more profitable even if you would have less users. And this is still something that's being developed. It's coming together, but big brands are stepping in. So I have a friend who is developed this game called Doctor Who for BBC. It's a big brand. It's a national broadcasting company, and this means that there's finally getting acceptance in the mainstream, and it's something that people don't say that it's a scam, or unless you're a British person and you say that BBC is a scam. And then we have DAOs, or digitally autonomous organizations. It's again, we are cloning a real world models and putting them on chain. So DAO is just like a smart contract controlled company that usually has some functions. It has a treasury, like money in a bank. It has revenue streams, so it's making more money somehow. And the token holders have equity or shares in the project, so token holders can decide what we are going to do with this money. And there are a few different kind of DAOs. So there's like normal governance layers for projects like Aave. So if you are owning Aave token, you can go to their governance forum, and they are like voting and things on stuff like what's going to be added in Aave, what kind of lending pools, what kind of risk parameters, and so on. So people vote on this stuff. Usually it's this very small portion of the token holders, let's say under 5%, but you can do it, and it's important process. Then you have venture DAOs, that are DAOs put together just to invest their money to something. It's like it's just you run an illegal venture capital fund on the blockchain. Regulators probably don't like the idea, but it's working very well. So maybe they are on something. And then we have these DAOs that born around a cause. I think the most famous one is Constitution DAO, who wanted to buy the United States Constitution when it was on auction. They managed to collect 40 million USD, but then some asshole US investment banker bought it with his pocket money, and just to screw up the nice little people. And here is a like screenshot how the DAO governance work. There's a tool called Snapshot, which is basically used by every DAO on this planet, and it's like a web portal. You connect there with your wallet. It sees what tokens you have there, and based on the tokens, it knows that you are owning part of this project, and you can participate in their decision-making process. And there are plenty of projects there, so you can just browse them randomly. You will find funny proposals. You can find all kind of spam, but there are some good stuff there. It's kind of a very hectic world. And DAOs are kind of a form of the scalable governance. So it works very well if you have a very high number of participants, and it's cost efficient. So there's no other really other practical way that 10,000 of people around the internet would come together and make some kind of decision that could be enforced. Because of course you can run a voting on a forum, and everybody can come there and vote. You can create your fake accounts and vote with them, and you can kind of manipulate the vote any way you want. But with DAOs, it's not possible. You actually need to. It's a watertight system that you can't cheat it in any way. And then we are getting more of the cutting edge stuff. So we are getting to the creator economy. This thing doesn't really exist yet, so it's kind of a thing of this year. There are a couple of projects in this area. I think the most high profile is called Lens Protocol, or Lens.dev, created by Aave software developers. And they're basically their selfish motivation is that, hey, if you can have your real world identity on chain, if you have like information about yourself, like you are, like Facebook has your information, they can give you a loan, uncollateralized loan, because they know that you are a real person and you are a nice person and you are not like a fake account. And the social graph becomes a trust system. So you start to use Lens in different services. You can connect multiple services to your Lens account, and you can use the same username everywhere. You get like one global username, and you get also your global reputation, and also you can monetize your content very well across different services. So you can basically sell your posts, or you can make money by creating content, and that's the dream of creator economy. And as I said earlier, this has a very high value promise. It's not figured out yet, but for example, as a Instagram content producer, you get 0%. On Twitter, you get 0%. On YouTube, you get 50%, which is nice from all the ad revenue. But there's definitely like lot of people who would like to make more money instead of Facebook making money in the United States. And if you don't remember anything else from this presentation, please download Favor app. That's a Reddit clone. It's based on Lens protocol and it's made by a team here in Finland. So this is by paid advertisement by them. So it's one of the first applications on Lens protocol, and it gives you a taste what's coming on the social media or creator economy. And then we have a finance automation. So after we have all of this cool stuff, we can trade and lend and collect on blockchains. It makes sense to automate the things and make it easier that you don't need to browse through all of the stuff yourself, and you don't need to manage it yourself. This is one of the point of my company called tradingstrategy.ai. So please also go there and follow on Twitter and newsletter. And this is the way where the finance is going. So if we compare this to an old world where you have funds or index funds or venture capital funds or just actively trading funds, usually those funds that operate in old finance world, they have something called management fee, and the management fee is paid to manage the fund. And that's why most of the investment bankers, if you know any of them, they are filthy rich because they are collecting these fees. And now because we do this on the smart contracts, there are no managers, so there can't be management fees, and it means that it's good for the people. All right. So the third part of this presentation is that things are not going so well in the blockchain world. So people are heavily criticizing if the blockchain is working or not. And there are a lot of experts on the news. If it works or not, is it like a scam and so on. So I brought up some positive examples that it's actually doing its thing. First of all is the value of the Bitcoin promise, that if Bitcoin is actually helping the humankind or if it's just bad. And well, it's not probably helping anybody in Finland, but in Russia and Ukraine, it's definitely a thing. So despite all the flaws, it's doing something good at least. You can't say that it's not doing anything. Then the other one is cheaper payments. Again, national business probably doesn't matter, but if you are running international fully remote team, software developers, these transactions costs start to add up. And for example, our case, I made a blog post where I compare different options, how much it costs to pay to our software developer in the United States. And surprisingly, blockchain is cheapest, even how hard you look. You can't go around the fact. If you pay them with the USDC stable coins, it's free for us, it's free for him, and none of the other options are even close. So it's really, really working. And the other one is the trading. Like the promise is that okay, everything is on chain, there is no management. It should be less expensive, right? And the answer is yes. I made other blog posts comparing different options. I even included Nordnet from Finland for the comparison. And it turns out that Uniswap version 3 is the cheapest option for small ticket investors to trade and buy stuff. If you go to their big pools, and it's for some assets, it's way cheapest. So like nothing comes close. And this is the fact. So finance as an industry, it doesn't produce anything. It's just sucking money from everybody else. And if we are able to make the cost of finance going down, it means that we have capital to spend some useful things like food or energy. And this is the value promise of the blockchain. So we are not yet there, but I see I'm positive. Like despite all the problems, I think we are going to get there one day. And the question again comes from people who challenge me and they say that, hey, it's not actually a blockchain doing anything. It has other reasons or other motivations or other factors that are making the cost going down or being competitive. And if we compare decentralized finance and blockchain products to old-fashioned financial products, there are things that are unique to blockchain that they can't duplicate, even if they try really, really hard. Like we have a bank here in Oulu and it decides, okay, we are going to take all of the good things in the blockchain and we are going to implement them in our organization. They can't do it because that's not how the world works. First thing is open source. So blockchain runs on open source software. And if anybody has ever developed software with open source and closed source, they know that open source software is just better. And because it's better, it's open, it's easy to integrate, it's easy to produce, and it makes creating software cheaper. It means you need less developers, and if you have less developers, it will cost you less, which means that you can offer your service for cheaper price. Other one is open data. So first of all, open data drives innovation. This has been researched, I think, even here in Oulu. It leads to a better governance. If you have a data that's actually real, you don't need to ask for it. You can just go to a website and see numbers. Okay, this is data. You can decide it yourself. Not all of this kind of data is open, especially in the old-fashioned world, which means that there are privileged participants that can do decisions based on their data they have, but you don't have. I think most common market where this happens is real estate. Even if they try to force open data, real estate agents have data they can use against you any moment they want. And most important is what we discussed at the very beginning is the open network. So you have public blockchain, you want to create something in public blockchain. First of all, you don't need to run the network yourself. Somebody's running it for you. They just take the transaction fee. So it's very easy to create a decentralized service. You don't need to ask permission from anybody. You don't need to buy API keys or anything like that. And with the open network comes a factor called composability, which means that you can mix and match different services. If you create a token, you don't need to create a wallet. So if you take any of the 200 mobile wallets, your token works there. Everything is linked together, and there are standards, and they just work. But if you want to create a wallet for euros or dollars here in Finland, the first thing is that you need to find a software company in Oulu that can create you the software that can contain your euros. And this is especially something that banks, they just can't do it. There's no way, because if they do this, it means that they give up their old business completely and they are no longer banks, they are something else. And this is part of the movement that has been going on, or trend that's going on for the last 20 years. If something that's tradable can be automated, it will be done. Like there's some old research I looked up from early 2000 that was comparing car sales in the United States online and offline, like a good old-fashioned car dealership. And it found out that surprisingly the online sales are much better for the consumer. And this is just like following the same trend. It's just squeezing the efficiencies out of online trading and making it better and better. And here are some of the future services that I believe are going to see disruption. so they are going to be changed because of the blockchain. One is the international business payments. It's already clear, it's already happening. Other one is retail banking, like if you want to earn interest for your money, using our lending pools is much better than bank in Finland. You get the much better trades, much better interest rates because it's just so much more cost efficient. Probably what we will see like long term, not this year or next year, is the changing of the communication networks. For example, email. It should have died like 30 years ago. If you are using email for any communications, you know that NSA, CI, and everybody is reading your email. It's going in the network plain text. Anybody who is tapping your Wi-Fi can read your email. So it's super unsecure, but it has not been replaced yet. So it's like a ripe for disruption. Nowadays, people are using WhatsApp and Telegram, so you get something that's a little bit better than email, but you are trading one power to other. So instead of somebody else reading your email, then it's being read by your Mark Zuckerberg. So you can choose your poison. Then the creator economy, Facebook, Instagram, Twitter. It's run by people, for people, but people are not getting paid for it. So that's ripe for disruption as well. E-commerce as a commercial scale, getting rid of these trust factors. Like if you are buying shit from Alibaba, you never can trust the supplier. And if we can remove this trust and get this stuff on-chain, being more verified, or actually you could see that you are really getting the stuff without needing to speculate. You could pay better prices or have less risk. It's the same. Less risk means always better prices. Then you have these review platforms like LinkedIn and TripAdvisor. You are either reviewing people or you are reviewing restaurants. That can also go on chain. In this case, you might be even paid for writing reviews. You are not paid today. And then in the end, like a core infrastructure like DNS, they can start come on chain slowly. All right, the last bit. So the political discussion. So especially today, a lot of people don't seem to be liking blockchain. It's very, very unpopular in the press. People are asking, should I work with blockchain? It's going to ruin my reputation. And there's a lot of criticism going on. And some of it is warranted, some of it's not. And I have been in this industry for a long time, and it has been always like this. So when the price of Bitcoin goes down, blockchains become unpopular. So there's a relationship. But what people can't see is that it's not the blockchain that's going down. It's all the tech companies. It's all the stock market. So it's always the same thing. And if you say that the Bitcoin is down 70%, it's still less down than Netflix. And you need to put things in a perspective. That's not only crypto, because if are you talking about crypto? Are you talking about internet? Are you talking about the world generally? And are you just like shooting the messenger, so to say? And these are the main factors, like volatility, fraud, price goes down. But it's not, as I said, it's not specific for cryptocurrencies. And somebody tweeted this recently, like he was going through all the publicly listed EV or electric vehicle companies in the United States. They all were down. Half of them were scams despite the SEC regulation. So people definitely had lost their money. And it's an example that even if we regulate this market, this thing would still happen in these industries. Like there's no easy fix. When there's a boom and bust, people are always going to lose money. And only way to manage that risk is that invest more. Don't lose all of your money at once. Don't do like me do. And this is like the history of cryptocurrency debts. So it's our 1, 2, 3, 4, 5th life. So I think cat has 9 lives. So we have 4 left. So let's see how it's going after the market starts to recover. It might take like 2, 3 years, but I mean it will come there. And also when there's criticism, you need to remember when these why these people are saying these things. They of course they can be right. There are problems, but sometimes they are saying these things because they are paid to say those things. And you need to always compare the facts. Like, okay, crypto is a scam. Like, but is it the biggest scam than something else? I mean, I would, to be honest, I would say there's more fraud in the cryptocurrency industry than somewhere else. But is it significant fraud? How much higher it is? Is it like 10 times higher, 100 times higher? Nobody has really researched that topic, so there's no answer, and people are just saying it's a scam. Nobody has really, like, as an academic researcher, looked the matter and saying, okay, I compared and I found out that it really is a scam. And this is telling of times. So 2015, MasterCard said that Bitcoin is a scam. And now they are saying that they are doing everything in their power to make it easier for people to access cryptocurrencies. So it could be still a scam, but at least MasterCard doesn't think it's so way. So maybe at least give it the benefit of doubt. And why there are so many issues associated with the cryptocurrency industry? One thing is that because of the boom, we have been onboarding a lot of new users who have no clue what they are doing. This is called, in IT slang, it's called eternal September, because always, maybe in University of Oulu, it also happened that when the September came, usually internet was only accessible from university. So September came, all the new students or fuchsis came to university. They had no clue how to use the internet, and they end up breaking all things. Like in my time, they sent an attachment to the email list, and all the servers crashed because it took all the disk space. So what happened in 1993 or 1994? OWL, or American Online, started to offer consumer internets or broadband or modem to people, and it's called Eternal September because so many clueless people came to the internet, and after that it has been downhill. And this is because, of course, these new users, they are not experienced, so they don't know how to things work. There's no education, and also like in a crypto, especially the user experience is so poor. Like you can screw up a lot of money by clicking wrong button, and I have done it myself, and it feels really bad. But with some time, we can get rid of these problems, and of course, people are getting better. So after getting burned once, they are a little bit smarter next time, and they learn to manage the risk, and they learn to understand that you can't trust websites or people on internet. And the other thing is that especially this month has been really bad in a way that what's called systematic risk or leverage has been removed from the system or sold away. So a lot of problematic companies, they are now being bankrupt, and they have so much money under management that it's hurting a lot. So all of that money needs to get unstuck. It needs to go somewhere, and because of the volatility of the market, they were taking too much risk. They couldn't manage the risk, and that means that the people are now going to suffer because they trusted these companies to not to take the risk. And I still would like to highlight none of these companies like Celsius that are being liquidated. They are not decentralized businesses. They are like old-fashioned fake banks where you deposit your euros or dollars, and the DeFi itself, the blockchain itself, despite these hiccups, the underlying tech has been working and nothing has been broken so far. And regulation is needed. Regulation is coming, especially for these centralized parties that are opaque. You can't see what they do with your money. So there's a regulation called MiCA coming European Union. There's a crypto bill coming in the United States. I don't know if it has any name. Russia and China has banned Bitcoin, so they have taken care of their part. And now I was reading news about in China that they have not only banned Bitcoin, but they have now also banned talking about Bitcoin. So if you say Bitcoin, you are going to jail. So you don't need to even have a Bitcoin. So they are getting tougher. The problem here is that, especially the MiCA, the European regulation, it's like a sledgehammer. The regulators or politicians, they don't really care if they kill some good business when they try to kill the bad business. So they are killing all the business just to get rid of the bad ones. This means that there's probably going to be very little crypto business in Europe in the future, and it's going somewhere else. And then the question for like people here in VTT, like, okay, Finland has been a success story in mobile gaming. Can Finland also be successful in blockchain research? I will tell you, it's going to be tough. Finland, especially, it's very conservative society when it comes to money. People really, they really don't like the blockchain here. So even less than in other countries. So, for example, for academic directors willing to take a risk, willing to wage their reputation with the blockchain, it's tough choice. And especially if there are more hiccups, then you are getting blamed and you are ruining your career. So there's no flexibility in the Finnish system. But the good news is that there are still companies doing it. So we have a couple of Finnish companies, very strange ones, some of them, but they are doing their part, and I think slowly with some education and some more smaller developer companies getting their feet wet with the blockchain, we can climb out from this Finnish ditch and probably do even successful unicorn businesses here. All right, that's me. That's all. Thank you so much.
So